Welcome back to Trading 360. I'm Nicole Petalides, live in New York City. Thanks for being with us. It's time for the Big Three on a day where we have lots of green. We have some interesting names for you, and joining us right now, Ben Lichtenstein will take us through the charts for the Big Three today. And here to take us through the trades is Mike Shorr, Director of Trading Education at Prosper Trading Academy. Thank you both for being with us. So, Mike, your first one is in the world of cloud, looking at Box. Tell us a little bit about this one, why it's on your radar.
Yeah, even in this down market, when you wanted or needed to buy, cloud has been it. That is obviously the driving force between everything that we do. And so I've been continuously, trying to find your value in these stocks. Now that we're seeing more of the stocks turning around, these are really looking at some really, really nice levels for us here, and Box is just an example of that.
So trying to find the value, and that's the thing, because a lot of these names have been beaten down, right, in a big way. But the question is P ratios and when you get in, and are they beaten down enough to merit finally taking a bite? Ben, take a look at this chart for us.
Yeah, Nicole, to answer that question, good morning, Mike. Good morning, Nicole. You look to the technicals oftentimes in a market that's been in a bit of a down turn to the extent that we've seen here as investors look for key levels that could find support, and we're nearing one. Have just recently tested one with Box around this 27 level. I'll show you exactly what I mean in just a second when we get into the daily, but first and foremost, the 60-minute time frame really points to some of the weakness we've seen. Now, keep in mind, in a market that's uptrending, a weakness oftentimes just provides a buy opportunity. So you can see, again, the hourly from 33 down to 27. This is a good look at some of the selling we've seen basically since the middle to end of April. And I want to point out how it's kind of, it was sort of potentially bottoming out around, as I mentioned, key support. Here's a look at the daily time frame. We've got a bit of a triple bottom down here. 3 tests of this level down around 27. You can see off the pandemic lows, we kind of V-bottom down to 864, went sideways around 1820. This was throughout the spring of 2020 all the way into that breakout that we saw in March of 2021. Then again, sideways around 24, we'll call it, imbalance area. I have highlighted as number 2. And then I guess this is the question here. Are we starting to form number 3? Because if so, we could have just recently come off a key level that could be a good buying opportunity, basically, in similar fashion to what we've seen as far as some of these other areas that have formed, possibly about to form a bit of an elongated pattern. Now, that's what the bulls are looking for. The bears are hoping this is more of a V-top type pattern, Nicole, and we kind of work our way back into this range that we just tried to break out, and it becomes a bit of a failed attempt. But in terms of efforts to get up above key levels, take a look. We're above the 200-day moving averages. We have been for a while. We're now nearing that 50, so that's going to be important. I think what will be key is to see, does RSI participate to the upside? The one thing I noticed is on this down move, volume was a little bit limited, and it did seem like, again, possibly that's more like profit taking rather than some real initiative type selling up there. Oftentimes that profit taking, like I said, or we've seen in the past, just provides a buy opportunity. So again, it has less follow through and less conviction associated with it, rather to like initiative type shorting up there. So this is going to be key to watch here, I think, over the next few days. Again, testing key support. If we find that and start to get bid off this level, 30-31, will open up a door for a retest of those highs we saw up around 33 and possibly start to form in a little bit of a more well-defined area of consolidation up on these highs.
Yeah, as you said, hitting those highs and then that recent sell-off that we've seen. Mike, Ben did a great job there with the chart and seeing those moving averages too, as it's now trending lower in the last 1 month, down almost 11%. What is your thought on a trade here for Box?
Yeah, so I'm looking at the same levels there that Ben is, and that's great. And that's one of these things where we're seeing these good companies get taken down with everything else. So I'm looking at the June 30-32 call spread, which this morning you were able to buy for about 45 cents. So you can make $1.55, risking only 45 for that. Remember, we do have earnings coming up, so if you're going to be playing in this game, realize that you may or may not want to hold that through the earnings report.
Right. Okay. So that's his final thought there. Ben, any final thoughts on Box before we get to the next mover here?
Yeah, I just wanted to quickly check in terms of the weekly time frame, because Box, we talk about these bell curve type patterns that form oftentimes, whether you're looking at the more granular, and this is really kind of tied back to those value areas that we just looked at, 1, 2, and possibly 3. You know, you can see when you look at the price activity through these lenses, you see an upper extreme, a lower extreme, and then again that kind of beef of the bell curve that forms here. Now, this is a little bit more supportive of, if this high fails, is a little bit more supportive of some potential weakness here, because the last scenario that I was creating, again, I talked about, are we starting to test a lower extreme, what could be a balance area number 3, but if this gets rejected, if we continue to see weakness, continued weakness through 24, 22 ultimately is not necessarily what the bulls want to see here. So like I say, this is going to be important to see if we can hold what was prior resistance. We're talking back in June of 2018 where they stalled out around this 27 level. Let's see if they can hold this level and try and build on some of the gains they've seen off the pandemic lows.
Okay, and then keeping in the world of tech, looking at Marvell, you know, in the tech world, Marvell Tech, right? It's in the semiconductors. And Mike, you're taking a look at this name, which, like tech, has been beaten down, had a high of $93 after a good earnings report last December, but since then, trending lower. Mike, your thoughts?
Yeah, you know, same sort of thing in these down markets that are starting to turn. We're looking for the things that were on our wish list. You know, this was, you know, the beginning of this year. This was, there are really high ties to Apple and Facebook. I'm always going to call it Facebook. They can call it Meta if they want. But and so big ties to that, and just a really nice technical setup. I'm a little bit less bullish on that, just because if the market does start to soften up a little bit, the first place that folks are going to go are the likes of Apple and Facebook to sell that down. So I'm playing it with a credit type of play, but still delta long. So I'm looking to sell the near term downside and sell a further the same expiration, but further out of the money call spread for that iron condor.
I see. So pushing that out. Tell us, Ben, as you take a look at this chart of Marvell, your thoughts.
Similar pattern on the intraday time frame, completely different when you look at the daily, though, in terms of what Marvell's been through over the last recent past here. Let's begin with the more granular, though, the hourly. And here you can see, again, a market that has been trending lower over the last few weeks. Similarly, in terms of what we were just looking at with Box, you can see the move here from 76 in this instance, we'll call it, 77-ish area, all the way down to 50.41, and how they're trying to come off that lower level right now. So the bulls are hoping this is a V-bottom type rejection of that lower extreme. The bears are hoping that, well, this area that was support around 58 now becomes a bit of resistance, and we continue to see this area, or these migration value areas, start to migrate and continue to form at lower and lower levels. So basically a failed at this upper extreme test of 58 would again lend itself to a trade back down to that 50 level, and as mentioned, the bears want to see this one break out and continue in that trend that we've seen. Now here, a look at the daily time frame shows, as mentioned, a completely different pattern in terms of what we were talking with Box. Box is actually, again, it looks like trying to establish a new area of balance on its upper extreme, while Marvell's come off significantly. I don't have a real lean one way or on this or the other. It just seems to have lost that really well-defined trend environment that we've seen. If anything, we're starting to establish areas of value at lower and lower levels, one recently forming around the $90 level, the most recent that we're trying to break out of here around 68. So I think this will be key. Again, do we V-bottom, kind of work our way back into this range here? A quick look at where things stand relative to some of the closely watched moving averages. You can see below the 50, that's the blue dotted line, the 200-day moving average, again, the purple in this instance, and we've been below the 50 for a while. We had that brief test back up above it, if you remember, end of March, beginning of April, but, you know, much like the broader market here, guys, these rallies have been very short-lived, and it's just not reaching that key area of support in terms of some of the intraday selling that we've seen relative to what we were looking at with Box. And even on the daily here, you can see that it just hasn't been supported along the same lines.
Right, and so I think it's interesting how you were talking about some of those levels, like around the 90 level, and here you see the 57 level today. Mike, tell us a little bit about your trade.
Yeah, so I'm playing off, I believe that's what the level that Ben was talking about. So I'm playing off of that kind of low to mid 50s levels to the downside. So selling the downside there, so that 53, 55 will be my bottom anchor of the iron condor, and then I'm going to give myself some room to the upside with that long delta, doing a 61.3. And you can sell that thing for, you can sell it for about $1.40. You might even be able to sell it for a bit more than that today. So it's $2 wide that you're selling for $1.40. So you have 60 cents of risk there. Now, and granted, you are taking a neutral to long play on this thing, but at some point, this is the kind of dip your toes in type of thing. Limited reward, limited risk, always limited risk with me, but good reward to risk on that trade.
All right, and last but not least, moving into a completely different world, into the world of transportation, taking a look here at Zim Integrated Shipping. Mike, your thoughts here, and then Ben will talk about the technicals.
Yeah, ever since we've had these supply chain issues, which is, there's a lot of facets into that. This has been kind of the FedEx, UPS, those are pretty well known as far as logistics and supply chain. This one's a little bit more on an international basis. They're more in the shipping type of, where like actually on ships. And so as we see, we're seeing supportive data coming out with retail sales and things like that. We're seeing consumer confidence, let's just say bottoming. It's not exactly through the roof by any means. But this is one of these things at depressed levels that can really give us a nice play. We do have earnings come up here, so I figured I'd throw in an earnings play for this one.
Okay. And your thoughts here, Ben, on this one?
Well, I'd agree with Mike. It does appear as if it's trying to bottom right now. We did see a move lower recently from, we're talking the $91 level. I think it was $91.25 was the recent highs we saw back in the middle of March, all the way down to $48.21. So a significant move to say the least. But as Mike said, it does appear as if we're trying to bottom. We've got a couple higher lows coming into play, most recently a higher high as well. So I think it'll be key right now if you're kind of looking at these three areas of consolidation that form, first around the $87 level and then another one around 75. Most recently, we've been in this really elongated one since the beginning of April, called 57.50 to 60. So we always talk about, again, not necessarily getting out on a limb in terms of trying to get predictive as far as price activity, but once we start to take out key levels that were established on the way down, well, you get a little bit of a better lean in terms of what we're trying to or attempt to do. So yes, it does look like we're trying to bottom right now, but I would want to see this thing get up above 75, 77 before I gained any more real confidence in terms of this intraday, intermediate time frame, a trend lower that we've seen from 91 to 48. So they're trying to get something going here, but let's wait and see if they can take out the key levels around 75, 77, 50 before we get too excited. A look at the daily time frame shows again basically the decay we've seen, as mentioned, from 91 down to 45, how they kind of found support around the same area that they'd seen some support. We're talking November, December of last year into the beginning of this year around that $45, $50 level. But I did want to just quickly check in on where things stand in terms of some of the closely watched moving averages, and you can see we don't have that much time for the 200, but we're holding above it, and you can see we're now just getting up above the 50-day moving average. So be interesting to see if we can build some momentum here. RSI participating to the upside. Volume has been increasing over the last couple days here as well. We'll see if this continues to do so. So the bulls are really looking for some of the positive sentiment we've seen that's given it a lift off recent lows, but not only lift off recent lows, and here you can see it again on the daily, how we've seen higher lows coming in recently off the lows that we saw back last month. So this is going to be important if we can continue to see some momentum here, but that spike high is still a ways off here, Nicole, talking Mike, up around 91. We're trading 67.48 right now, up 2%.
When you see these charts, Ben, that's so great. You did such a great job with this because it gets you so excited, right? You say, oh, look, it's above the 200-day. Oh, look, it's at the 50-day. Oh, look, it has higher lows, like what you were saying. And, and the volume. You just want to start jumping for joy. But to Ben's point, he said he would like to see a little more to the upside. Mike, I think he painted the picture well. Tell us your final thoughts here on Zim.
Yeah, so I'm not looking for any sort of wholesale bullish play here. So you have to think that a lot of the pricing models have put in some pretty cautious numbers for them coming up to earnings. Any sort of guidance that is neutral neutral, slightly bearish, or even a little bit bullish, they're pricing in somewhere in the 7.5%, 8% range for earnings. And so that puts us at about the 71. You could go out to the 72 level. So I'm not even talking about the 90 levels here. I mean, this is strictly for earnings. This will be a slightly bullish range bound type of play. So that 71 call calendar this week versus next week, you can buy that for about 75 cents. We have really, really extended implied volatility going into this week for good reason. But can we play that in a responsible way? And you can do that with that call calendar. You can buy that for about I'd have to check. This morning you can buy it for 75 cents. And my modeling, where implied volatility, I expect it to be after earnings, that has a 1-to-1 reward to risk ratio. So exiting this thing at somewhere around $1.50 if we get, move anywhere north of 70 and hopefully not too much above 72.
All right. Thank you. On this Tuesday, the big three. I hope everybody enjoyed it very much. Mike Shorr of Prosper Trading Academy, looking at the names Box, Marvell, and Zim. Thank you, Ben Lichtenstein, always taking a good look at those charts. Nice big three today.